Hi guys, it's Marissa here, and today I come to you with more good news. So last week, Apra, which is the Australian Prudential Regulation Authority, decided to review some of its lending parameters that it has enforced on the banks recently, in recent times, which is why, as we know, lending has been getting harder, credit policy has been getting tighter. It has been harder for Australians to borrow money, and one of the main reasons for that is the fact that Apra did a major review and was whipping the banks with a whip, telling them to tighten up lots of aspects of their credit policy. So one of those things that Apra did come out and say originally, which is has seen a big tightening, is it actually enforced the banks to have to service everybody's loans at a minimum of 7%. So regardless of what interest rate they were paying, whether they were paying 3.5% or 4%, the banks would have to assess their loans as if they were paying 7%. So Apra came out last week with a letter to the banks deciding to lift that requirement. So instead of enforcing it, that the banks would have to assess the loans at 7% interest rate, Apra are now saying that banks can choose their own assessment rates, but have suggested that the assessment rate should be at least 2.5% more than the interest rate that the customer's paying, which is reasonable. So this is good news, because this basically means that each lender is going to be able to set their own assessment rate. And that is going to mean that we are going to see assessment rates of loans drop. And with assessment rates dropping, it will mean people's servicing capacity will improve and increase, which means that if you haven't been able to get the loan that you are after in the last 6 to 12 months, this may make a difference for you, and it may mean that you can actually afford the loan based on the new servicing requirements. So do I think this is good, or do I think it's bad? Look, I believe that in the current environment, they have come out and said that the reason why they've done this change is because they do expect interest rates to remain low in the foreseeable future, which is great news, I think, because it does make the home loans and investment loans more affordable. So we are expecting to see a low interest environment moving forward. Banks have also tightened up on a lot of other areas of their policy. So the lending restrictions have done their job as far as Apra's concerned. So Apra's comfortable with giving the banks a little bit more give in terms of what they can do in regards to the assessment rate. I think it's a good thing, because I think that it is a bit silly when someone's paying 3.5% for their loan to be assessed at 7% when that is so far from what they're actually paying. So for me, it makes sense. And I'm hoping that all of this gets through and we start to see this filter through over the coming months. So I think it's good news for homeowners, it's good news for property investors, it's good news for people wanting to borrow money moving forward, because it will mean their borrowing capacity will expand. Now, with borrowing capacity expanding, it will help also to boost the property market, which is also more great news, I think, because it will increase demand of properties. So overall, I think good news all around, and I think it's a good decision by Apra to loosen the regulations in this area, and hopefully we'll see lots more changes over the coming 6 to 12 months that will bring common sense back into lending policy and help borrowers, but also help the property market give it a bit of a boost. So that's all from me today. I'd love to hear your comments or thoughts, so drop me a line when you're free. Thanks, bye.